How's it going, everyone? Today, we're going to be covering the question of whether the US stock market is on the verge of the greatest bear market of our lifetimes. So we're going to be covering a lot in this video, but I'm going to try to do it in a pretty quick manner. First off, we're going to be covering the long-term charts on the S&P 500. Then we're going to cover the ultra long-term charts on the Dow Jones Industrial Average, like the last 90, 100 years. And we're also going to look at the theoretical downside potential in the US stock market. And then we're also going to cover Bitcoin. I'm just going to do a quick little update for the YouTube channel. Again, I've been covering a lot of this stuff on my Instagram and my Twitter, and it's been so much easier, so much quicker just to post up charts that I'm doing day by day. And it's been really great for me to be able to do reflections on that analysis, looking back at it. And it's also really great for me posting every day, and it helps me keep a really fresh eyes looking at the market, looking at both sides and being open-minded. And probably the best thing has been hearing some of your thoughts about certain topics I've been bringing up, and also just your thoughts on the analysis and the day-by-day action in this wild market. There's been a lot to keep my eyes on, and so it's been crazy. So that's why I've been really focusing on those channels and on my own investments and trading and whatnot. And I've been wanting to make some videos, but just wasn't in the cards. Also, just juggling school and making sure that's my number one priority. So, but I wanted to do a big long-term update on the U.S. stock market, given the very important place that we're in, the time that we're in right now, when looking at the chart. So, yeah. With that being said, let's get right into the S&P 500 chart. So let me pull that up here. And this is the futures chart. So this takes into account both the overnight action and the action during the regular US trading hours. And this is the monthly chart. So this shows right over here to the left, this is the big move down during the financial crisis back in 2008 and early 2009. And since then, we have been in this spectacular bull market. And it's looking very, very toppy. Like I sometimes say that, just like when it looks really like there's not much more potential to continue going up. And so I made a video probably before the election around October, I think right around here, showing this really important line. And this is drawn from the bottom here, the low here in 2009, and going all the way up. And I'm just going to redraw that for everyone so that you can see that, because this is I think a beautiful line. And let me just extend that to the right. And that has really basically defined the entire bull market since 2009, just drawing from the low in March of 2009 to the first low right here. And we bounced off of it, broke back down, and since then we've been testing it. Tested it right here before the crash back in 2020. We all remember that. And then we went all the way back up, and this is when I made my last long-term stock market update video, looking at the charts for the first time. And we did have a substantial sell-off, and after that we came right back up, tested it, and broke above it. We came back down and retested it. Let me just zoom in. We broke through it, came back down and retested it. And since then, we've been heading higher. So the question is, how much higher do we go? And who knows? But basically, the bull market, I think, is intact until we break below this trend line right here. And it's a very important trend line, as we've seen. And if we break below this, it could really spell a lot of downside. Now, the reason why I have these two red lines here, and for anyone that's been following my Instagram and my Twitter, you all know that those two levels are really important, especially the 3646 level. Let me just drop it down to the weekly here, just so we can kind of see this action. So again, I primarily use Elliott Wave, but I also look at price action, a lot of different things. But Elliott Wave is one of the things I use oftentimes to kind of interpret the market and the market structure. And when basically the gist of it is, again, 5 waves up. 5 waves up is a complete trend. And after 5 waves up, you have a 3-wave correction and then another 5 waves up. And that's kind of the way that markets subdivide. Very simplistic. but that's the general theory. It gets a lot more complicated as you get deeper, and it's not always very clear. But it's a cool little roadmap and schematic to kind of understand and be able to apply. And so since the election, right around here, this was actually well before this, around October, November, we made another high here, and we also made this high, which was the last long-term video I did. And so the way I'm looking at it is either this is probably a wave 4. And so basically the idea is that we've had 5 waves since the crash back in March. And so the question is, when do we complete this long-term move? I'm going to get back into this, but first let's just look at the big picture. Let's count the waves from the low back in March. And the way I would count it, which I think is the cleanest count, is we take from the low, the first high, that's 2. And then we have another 1, 2. And that's basically just a continuation pattern. It's developing into a larger move. So let's count 5, 1, 2, 3, 4, 5 or 5. I think this is the cleanest count right here. So that's all just wave 3. Then we have an ABC, A, B, C, and then we have another move up here. And who knows how much higher this can go. In my opinion, we might have already topped out, but I'll get into that in a minute. But this is basically the general idea. I made a pretty bad judgment when I was looking at this and assuming that this was the final top, because a mistake that I realized that I made in retrospect was that I was valuing my fundamental analysis on the economy and, where stock prices should be going, and discounting the technical outlook. And a reason for that, and it's pretty clear, this move from the bottom up doesn't look like 5 waves. It looks like 3 waves. 1, 2, 3. It looks very corrective, which means it's not going in the larger trend. And so this ended up being a 3, 3, 5. And that basically suggested that there were more highs to come, or at least that there was a possibility for it. And I was very bearish. And I think discounting the technical aspect of the probability of us continuing, of the stock market continuing to make more highs. Now, the interesting thing about this is this pattern, this kind of, it's called an expanded flat. And it's also kind of it's forming this triangular shape. As you can see, there's lower lows and there are higher highs. It's very characteristic of a kind of consolidation that happens before the last move in the larger trend. And in other ways, in Elliott wave terminology, that would be a wave 4. And so to me, this is fairly clear that this is a final move, a terminal move in a long-term trend that needs a correction just to be healthy. Markets don't just continue going up indefinitely unless you're in a hyperinflationary environment. Now, some are arguing that we might be heading towards that, and I'll be talking about that in future videos because I'm really interested in macro, and I think that's so important because that's the big picture, and that impacts all of our lives. But for now, as far as looking at this from a technical aspect, as far as looking at it from an Elliott wave standpoint, this does look like a pretty classic 5-wave count. And just to kind of be clear, there's smaller 5 waves within this 3. So we got a 1, 2, 3, 4, and 5, and that makes up the third wave. So that's kind of the general idea. And the reason why I have these 2 red lines, hopefully this now makes a little bit more sense, is because I think from this low back here, there's been a smaller 5-wave move up. And in my opinion, I think it's very likely that, dropping it down to the weekly now, that this was the wave 4 in that correction. So maybe you could call it a 1, 2, 3, 4, and now we're going up in 5. And if that's the case, then this right here or this right here would be wave 1 of that final 5 waves, of the final 5 waves of this entire move up since 2009. It's kind of confusing, but that's just the general idea. Again, this is technical. This isn't looking at what stock prices should be doing or looking at future potentials for businesses or the economy. This is purely just looking at the chart and trying to interpret it from a technical standpoint. And this standpoint measures human behavior and emotion and how that oftentimes translates in market structures. So it's very theoretical, but this is kind of a cool way to look at it, and something that I'm interested in doing as far as interpreting market structures from another perspective. So, anyways, in my opinion, when this level breaks, and this is a little bit off because this is the futures chart. So on the cash index, it's a little bit off, but it's 36.46 on the live charts. That's what I'm looking at on the cash index. And you could maybe count this as a wave one. Personally, I don't think it's a very clear 5-wave move, but potentially that could be the level. But anyways, this level, this trend line, this black trend line that goes all the way back to 2009 is really key. It's really important. And so as long as the S&P 500 holds above this trend line, technically the bulls are in control. But when this starts breaking, that's going to spell really big trouble. And in my opinion, if you've seen my post that I made today and really looking at the small picture, looking at, really zoomed in, I've been following this day by day, and it's looking quite interesting and very, there's a lot of potential to the downside in the short term, not just in the long term. So this is more looking at the big picture. So anyways, that's what I'm looking at with the S&P 500. And when we zoom back out, looking at, okay, well, where does a bear market go from here? Well, if we're just looking at this picture, just from the last 12 years, since the Great Recession, a good, I think, target as far as a long-term buying opportunity, just taking this info into account, would be around this level. This is the 2100 level to the 1800, 1850 level. And again, none of this is financial advice. I'm just, throwing some levels that I'm looking at for my own purpose and my own, analysis. I'm just kind of throwing this around. And I think this is a very interesting level when looking just at this chart. Now, there's a lot more to take into account. The S&P 500 has been around longer than just 12 years, and so there's more information to take into account. But when we look at the super long-term picture of the stock market, it's really good to look at the Dow Jones Industrial Average. That's been around for ages, it's been around longer than just the S&P 500. And this chart also has a lot more data that I can use. And so this is the Dow Jones. This is using the linear scale. And so a very similar count to the S&P 500. I just have this labeled here, but very similar count. And let me just take this off so it's pretty clear. And this is kind of the count. We have another same thing, 1, 2, 1, 2, extended wave 3, expanded flat 4, and then this final move up. And as you can see, the Dow Jones, if you draw a parallel channel from the 2 to the 4 and then you slide that up, the Dow Jones is broken out and it's above this parallel channel. And so the question is, how much higher do we go? Who knows? Again, that's kind of the question. But when we look at it from a long-term standpoint, it is a very, I would say, not a good long-term buying opportunity in my opinion. Again, from using the last wave 4 of the 3, this would be the target. Just looking at this part of the chart, this is kind of the zone that I would be looking at. It could go deeper, it might not go as deep, or it just could continue going up. I don't think that's going to be the case, but that's just my opinion. But this is kind of the picture, and the question is, how much higher do we go? And I'm looking at the S&P 500 to kind of determine when I think the short-term picture, just this move from March of 2020, may start to crumble. And when this crumbles, I think that will also in turn suggest that the larger trend since 2009 has also ended, and that we're heading into a bear market. So, okay, another bear market. Bear markets are common. They usually happen, I think, every 4 to 6 years, something like that. So they're common. We've just been in an unusually long bull market. Some are calling this a bear market right here. This 3-month, it wasn't even 3 months. It's like a month and a half move down. Some are calling that a bear market just because it crossed the threshold of the arbitrary 20% decline, which I don't think. it's hard to just put a random number on what qualifies as a bear market or not. It's like, oh, it's only 19.5%. It's not a bear market. Like, okay, whatever. But to me, this is not really a bear market. And technically speaking, it wasn't a bear market because looking at it from an Elliott wave standpoint, it was just a part of a correction of a larger move up. And so I guess you can always zoom out and make that case. But again, this is a pretty short term move when you look at it on the big picture. It was a 35% decline, but it was still short lived. And we made new highs less than a year later. So that says a lot about how volatile this market has been. And I think also it's interesting how people are really underestimating this next bear market, and that, or maybe that we're in the new stages of a bull market. Yeah, you already know my opinion on that. But anyways, let's look at this even further. So I'm going to take this out since we kind of understand the picture. This could be counted as 5 waves since 2009, suggesting that we're in the very, very, very late stages of a bull market, and that we're going to be having a correction or a bear market that's at least proportional to this kind of move that could be easily coming down over 50%. Let's see, just looking at this from where we are right now, down, that would be a 43% decline, down to here, a 50% decline. So that's pretty significant. And when we look at the S&P 500, same count, taking it from the top where we are right here, taking it down 45% and 52%. So to me, this is very conservative. This would almost just be another low in this series of higher highs, lower lows, higher highs, lower lows, higher highs, lower lows, and then we just continue going up. I don't think so. I think this would really start a much larger move down when we're looking really far out. Now, again, that's just a theoretical observation, and things are subject to change as new information is received. But that's at least my the way I'm looking at it from what I can see right now. So now when we look at this, this is the monthly chart, Dow Jones Industrial Average. Let's zoom out even further. So again, we get that this is 5 waves, or at least that's the idea. Now, when we zoom out further than just the 12-year zone, and we're going to change this to a log scale to actually see all of this data. And that's going to look crazy, but we're going to stretch it out here. So you're looking at right now the Dow Jones Industrial Average. And I'm going to delete these lines over here. Well, I can keep them just to give perspective of just how large this bull market has been. This is the monthly chart looking at the Dow Jones Industrial Average since the Great Depression. Here's the Great Depression right over here. This was an 89% decline. Let's just go ahead and put that on. Let's see, down to, yep, about 89%. And since then, we have had a very, very grand bull market, if you look at it from that standpoint, like this being just one big bull market. Kind of hard to even imagine conceptualizing it from that large of a magnitude. But if you count it from the bottom of the Great Depression, now this is just the bottom in the stock market. The Great Depression didn't actually end, economically speaking, until, like the, I don't know, mid 40s or whatnot after World War II. But if you take it from the bottom, you could count 5 waves. Now, this is a pretty hard way of looking at the move, just because this final wave 5 is so long. You could also count it if you take it from this low. Now, I don't think this is technically as clean of a count, but it looks a little bit more proportional when you look at the big picture. You take it here, you switch this over here. This looks wild, I know. Take that to something like that. That could also be a pretty good count. Now, what would this be? It's kind of hard to say, kind of like a WXY, and this is like an ABCY. But again, this is getting kind of technical, but just proportionally speaking, this looks like a cleaner count. And since the Great Depression was longer than just the move down from 1929 to 1933, you could maybe make the case that this was an extended move, and this wasn't really the technical bottom or the fundamental bottom of the Great Depression. But in either case, you can count it just the same. And this suggests that if you count it the prior way like this, it would suggest that the Great Recession was only a segment of this final wave 5 when we're looking at it from the 90-year scale, which is pretty wild to imagine that this isn't the Great Recession wasn't even a significant label when you look at it from the super, super big picture. Pretty crazy, which suggests that this bear market could be much more significant and also from a time standpoint, much longer than the financial crisis was. The financial crisis also was an expanded flat. And I've talked about this in my previous video about Bitcoin, which was what I was anticipating Bitcoin was tracing out, which wasn't the case. And I flipped bullish short term on it. But right here, we have this A, B, and C. And so that was a wave 4. Regardless, depending on the scale, it can change, but that was a wave 4. And now since 2009, we've had this final wave 5 of the larger wave 5 that started over here in the 1970s. Or you could say that the wave 5 started here in 2009. Either way, there is a compelling argument that this is not just 5 waves since March of 2020 or 5 waves since March of 2009, but actually 5 waves since the Great Depression back in 1933 or 1945, depending on how you prefer to count it. Regardless, this is really, really significant, which I think suggests that the stock market could decline to levels not seen since the 2000s. I think that's very possible. Now, again, it's, we're looking super far out, and it's hard to really gauge that because it's too soon. I'm still looking at how much longer this bull market could continue and looking at the trend reversal that I think is potentially very near or already in its early stages. So this is really zooming out, but I think this is really important, especially for long-term investors, to get a different perspective on investment vehicles and the market, because there are not a lot of people that are right now alive that actually experienced the Great Depression, and I didn't. I've never even lived in a bear market. Back in 2009, over here, I was 9-10 years old, and I didn't even know there was a financial crisis. I was just playing basketball and doing taekwondo and just having fun in my little living my life in elementary school and thinking that was the big world. That's what I was focused on. So I had no idea about any of this kind of stuff. So I'm a byproduct of a long-term bull market, no matter what scale you look at it from. So I'm trying to stay objective and looking at the big picture, but it's really hard. And so I think it's really important to consider these kinds of things that seem almost unimaginable when you look at this kind of scale. And just so that we can be cognizant of the objective risk that could actually be out there, especially during a day and age where everyone's trying to invest, everyone's trying to make money and do this and day trade and do that, and it's just wild. I'm partially a part of that as well. It's been a good time for investors in the last 10 years, and it's just concerning to imagine how the tide could change and how a lot of people could be completely blindsided by that. And so that's just the angle that I'm looking at it from. And again, this channel right here, I haven't even talked about it, but this is called a Schiff. What's it called again? Schiff pitchfork. And it's kind of cool because if you take it from the initial bottom that you're looking at it from the first high, and then pivoting it on the swing low to that, it kind of projects this channel that can go out for however long the trend that you're looking at is. And this is a pitchfork going back from the early 1930s. And right now, we've only reached this pink part of the channel one other time. We're right at it right now. The only other time was during the dot-com bubble right here in the early 2000s. And we almost peaked at it during the top of the housing bubble. And right now, we're actually looking like we're peeking into it. We're right now on top of it, and we're on top of this channel over here as well. So really, really dangerous waters for the Dow Jones Industrial Average, for the overall stock market, US stock market as a whole. And yeah, just a lot of downside potential. So yeah, I just wanted to cover this because I think it's fascinating, first of all. But I also think it's really important to understand the potential risk that is out there in the stock market. And it's just so easy to just look at the last 10 years, the last 30 years. It's like, oh, the market always goes up. We don't know why, but just put your money in the market. It'll grow for sure 6-7% over time, except from 2000 to 2009. Don't, kind of ignore that. But it's really easy to just kind of take that long-term standpoint. And people at this point, I feel like, are just equating investing to always resulting in a positive thing. And I think it's really important that we actually know what we're investing in, because just because you invest your money doesn't necessarily mean it's always going to return positively. I for sure know that individually, and I've had to learn it the hard way. And so yeah, that's basically the gist that I wanted to kind of get across. And I'm going to be focusing a lot on the US stock market and Bitcoin and any other markets that I think are interesting or that I'm personally looking at on my Instagram and my Twitter. But I'm looking at it mostly from a micro standpoint while understanding the big picture, but really looking at play by play, whereas this is looking at super long term. But this level also over here during the top of the bubble in 2000, see some support right here. And then also the bottom here in the dot-com bubble and near the bottom over here during the financial crisis. I think this is also going to be very good long-term support. And this is 66% down. It's like 2/3 down, maybe 70%. And this is down below 10,000 on the Dow Jones. So these are really, really far-fetched levels, it seems. But from a technical standpoint, this could definitely happen. It's just about taking it one step at a time, and trying to protect ourselves and also take advantage of potential opportunities of buying assets, buying stocks, buying different things for a lot cheaper, and protecting ourselves financially, not taking on a risk that we don't actually realize that we're taking on. So yeah, that's basically the gist of this rant. The market from a long-term standpoint, really, no matter what standpoint you look at right now, looks extremely risky. And yeah, that's basically the only way I can put it. And it's quite scary. It really is. Just considering what this could bring to the economy, to people that have their life savings tied up in the markets, and it really is quite scary. And I hope that it's not as bad as this technical picture is presenting it to be. But if it does possibly happen, it's best, I think, for people to take the conservative route and protect themselves in the worst case scenario and hope for the best scenario. That's what we always want to see. So anyways, lastly, I want to cover Bitcoin real quick. And I've been doing this on also Instagram and Twitter, like I've been talking about. But this is basically the big picture on Bitcoin. And I've been talking about it for about the past week and a half, that I've started to actually turn bearish on Bitcoin in the near term, looking at the next days, weeks, maybe even months. Because personally, I think it's looking like we're close to a top in this wave 3 right here. Now, again, before I was suggesting that this could be an expanded flat pattern, and it ended up not turning out to be that way because at around 40,000, that was basically the level that I was looking at. I'm like, if we come up to 40,000 and this structure still doesn't look complete, then we're probably going much higher. And we have gone up 50% since that last video. We went up to over 60,000. So now the question is, how much higher do we go? Well, who knows? But from this picture, it looks like we may have a top. And the way I would count this is looking at this as a 1, 2, and then we have another little 1, 2, and then we have another little 1, 2. Then we have a 1, 2, 3, 4, 5. So that's 5. And then we have a 1, 2. That's all 3, 4, 5. And then we have a little 4 and then 5. Now, this 5 could continue going up. This could be just wave 2, and then we have wave 3 of 5, wave 4 of 5. It could. But from the way that it's looking to me right now, it looks like this might be the top, and that we might be heading lower in Bitcoin to have this kind of wave 4 pullback. Now, again, this is just a schematic. Who knows how it's actually going to trace out? It could go till June. It could go till only April. Who knows? But this is just like the schematic on it. So, but that's what I'm looking at. And just to kind of clarify to anyone that's following me on Instagram and Twitter, this is at least my my perspective on Bitcoin for now. I switched bearish around 58, 59,000. Currently, we're at 52,250. So we have had a decent pullback. And yeah, do I have the Bitcoin chart on here? Well, I posted this. This was, I think, yesterday or something. This is kind of the count that I'm looking at since the all-time high. It's a little bit complicated, and there are a lot of different possibilities. But I am looking at downside, and the next point that I'm looking at is possibly could be an interesting buying opportunity. Again, it's very risky. Would be between the 40,000 level to around the 28,000 level. I drew this channel. This is on the logarithmic chart, by the way, because this move looks like nothing, but it's actually a move from $42,000 up to $62,000. So this is a really big move up. Just to give perspective, here's the linear chart. So you can see that this move was not nothing, and this move down since then has also been quite substantial. And I don't think it's necessarily over yet, but could be wrong. And I'm looking at that very closely. I think 58,000 was the level. If we broke above 58,462, I'd probably change my perspective there. And but again, anything can happen. These markets are absolutely wild, and so it's really important that your risk tolerance and that you're being careful and you're doing what and understand. I like dabbling around with markets and playing around with charts, and sometimes doing a trader here or there. And I think it's interesting, and I think it's cool. So that's why I do it. But I understand my risk tolerance, and have that safety net. And it's really important that everyone else has that too, because it's really easy to get carried away and see everyone else making all this money, or this trading guru and this person saying that you can make XYZ amount of money per week, and just bite off more than you can chew. And I don't think that's cool for people to try to be making money off of. But anyways, yeah. Moral of the story, just make sure to be careful and not take on too much risk, because that's pretty basic. But anyways, as far as Bitcoin goes, this is the most important level when you're looking at the long-term charts. This is the $13,000 level. If Bitcoin were to violate that, then this is not a 5-wave pattern, unless we have a 5-wave pattern, and then it breaks below, which I think is the most likely scenario right now. But this count does suggest that there will be more highs in Bitcoin eventually, but I do think there's probably going to be a pretty big move to the downside that's already been quite big, but I think it's got more to go. And this is kind of the general ballpark of what I'm looking at, kind of these two levels. This is the prior wave 4 of three. I know it's confusing, but that's kind of the range from 40,000 to 29,000. And I'm looking at the wave count to also give me on the short-term time frame to give me more clarification of where we're at. And yeah, and then this is the other level that I'm looking at, which I think is pretty cool. This is the parallel channel. This is a logarithmic parallel channel. Let's see if it works. It should work on here. Something like that. Trace it down to the bottom of wave 2, project it. How did I do this? Was it like that? Is that it? That doesn't look right. I guess it is right. That looks kind of shallow. Let's see. Did I do that right? I think I actually had it on my other chart, but this is definitely too low. Let's see if I think I had it from here to here, didn't I? Let's see if that looks more right. I think I did. Yeah, I did. So let's try this. Trace it from the go here. Trace it to the bottom of 2. And then we'll trace it backwards like that. I mean, this channel really worked well. Yeah, that's it. That's it. So this is basically, this is the low from the wave 1 low to the wave 2 low. And this is projected from the top of, this is long-term wave 3. And I think this is long-term wave 4. And this is long-term wave 5. So this is just counting 5 waves of the final wave since Bitcoin's inception around 2010, 2009. And it's interesting too, Bitcoin has been around and has been in a massive bull market just as long as the S&P 500 has been in its in its proportionally large bull market since around 2009, since the end of the great financial crisis. So quite interesting. I think Bitcoin is also going to head a lot lower after this 5-wave move is completed. Now, again, this could be wrong. At this wave 4, we might head all the way down, and that would break this pattern. That would become glaringly clear at around 13,000, 14,000. But personally, I think that we're going to have a wave 4, and that will fall between the $40,000 and the $28,000 range. Or, this channel, this is going to be a cool channel. This is trading at around 34,000 to 35,000. So this channel I'm going to keep a close eye on as well. And then see for a potential move up to finish this move. And when we look at this wave 4 should be somewhat proportional to this wave 2. And this was 9 months and about a 75% decline or something like that. Let's just take it and look. Oops, this one. Down to here, 72%, something like that. So very large decline. I don't think this decline will be as large, but if we just take it from the all-time high, and let's let's assume that this high is the top of wave 3, which we don't know. But if it is, if we come back to, let's say, this channel right here, that's a 43% decline. So it doesn't look like much, but it is a pretty substantial decline. All the way back down to this red trend line, 51%. I don't necessarily think we're going to come all the way back down to this line, but we definitely could. And I mean, technically we could continue going lower, and that would start changing the long-term count. But this is basically where I'm at with Bitcoin. And this is why I have turned bearish, given that the short-term count is starting to look impulsive and could suggest a larger move down in the coming weeks. So that is what I'm keeping my eyes on. Again, here is my Twitter and Instagram. Whenever I think something's important or something that I want to log down for reflection purposes, or just to kind of orient myself. So that's really the biggest reason why I do this, just to kind of make sure that I'm looking at both sides and not just focusing on my bias, but focusing on all the possibilities. I post some stuff here, and once in a while post something kind of funny or something I find humorous in the news or whatnot. But yeah, so that's what I'm going to be doing in the short term. And that's where I'm going to be showing most of my market updates and whatnot for those that are interested. And then hopefully I can start having some more time to do some macro videos and looking at some of the other really big topics and things that are going on in the world right now, that are, I think would resonate with more people. This is more of a market update for those that are interested in trading and technical analysis and all that kind of stuff, looking at some of these fast moving markets. But I wanted to do this because this is big picture stuff, that I think might pertain to some people that are investors that want just a different perspective on these kinds of things. So anyways, as always, I've got to prioritize school, but if I can get some time, I will definitely look forward to doing some videos and on different topics and stuff. So yeah, let me know your thoughts and what you see happening next in these different markets, where you agree or disagree or whatnot. I'd love to hear your thoughts. Thanks so much for watching, and I'll see you all next time.